Hey there traders, thanks for joining me for a free video. We're going to take a quick look here at the broad market and where we currently stand. Last week we had some post-July 4th profit taking kicking in, so we did see a little bit of the excitement fade as some selling Monday and Tuesday ultimately made the biggest difference for the week. We did see a little bit more weakness from there, but we saw a snapback on Wednesday and then a little bit of a lift on Friday. So we're trying to stabilize here. For the NASDAQ, that's just above this 43.71 level. You'll recall that was some resistance here just a few weeks ago, as well as back in the spring. And so that level has been cleared to the upside. It had been resistance. Now it's serving as support. We'll see if we can see a lift here, possibly carve out a little bit of a range here above that prior level. But on the way back up, we've got a small unfilled gap here to 44.51, and then of course beyond that is going to be the high up here at 44.85. For the S&P 500, it's still channeling higher. It did respect the lower boundary of this range a couple times last week after testing it. Doesn't have a whole lot of room to the downside should it happen to roll over here. But rising support is currently around 1959, and then the upper channel line is up here around 1992, and both of those rise daily. So if price kind of gathers a little bit of upside steam, we could be up here challenging 2000 before too long. Overall, these are the two big levels to be watching, so continue to watch these rising support trend lines because those are really marking the pace of the move. The Russell has pulled back very sharply here. On the week, we saw basically a 4% decline. It would be deeper than that if you considered Thursday's low, but this is a pretty good little pullback here, and we're now back down here testing this 1160 level, which has been important as both resistance a couple times here, as well as support here, even back in June and currently in July. So we've got this 1160 area where we're entering this next week, kind of right at that area. So we'll see if this test ends up being successful for the bulls, or if instead we break back below here and continue the decline for the bears. If we do rally, levels that I'd be watching on the upside are this gap to 1173. There's another gap to 1186, and then of course another one up here to 1208. So we've got a few gaps here to the upside. We also to the downside have kind of this June pullback low down here at 1118. That would be the other number to watch. And then finally is the Dow, which has just kind of pulled back into its trading range here, this channel that it respected and entered from early June until now into July. So we saw this minor breakout here to a new high. That was at 17,074. We've got support down here at 16,735, and then of course we've kind of got this 16,980 area that has been respected for on a number of occasions as resistance, and of course we're just a short distance from there as of tonight, or as of Friday's close. So we'll see how the week ahead shapes up, but we've got the S&P and the Dow still holding up much better than the Russell and the NASDAQ. They've seen a little bit deeper corrections. That's where the hot money, the speculation takes place more than it does in the blue chip senior indices. So we'll see in a week ahead if one of those sides starts to kind of drag the other one along with it, whether the small caps start to pull the large caps down a little bit with them, or if instead they're able to kind of turn back up and strengthen along with these senior indices. If you're looking for some trade ideas to add to your own, stop by the site at thestockbandit.com, check out the free trial, and you can get access to my trading plan on a daily basis. I'd love to serve you and help out. Other than that, thanks for joining me for this video. I will be back with you soon with more, but until then, trade like a bandit.